Today we're going to review budgeting and the critical aspect of budgeting as it relates to the overall financial plan and trying to achieve overall long-term goals with your financial plan and your life plan. And budgeting really being the foundation for achieving those plans and addressing each individual component of the financial plan. Budgeting really having a critical place in that overall picture. And trying to look at budgeting more from a broader perspective of not just establishing a budget, but really dealing with it as a lifestyle and trying to associate your overall lifestyle and your overall situation with all of these components of the plan into the big picture. Similar to when you're dealing with or addressing your physical health, and oftentimes a diet not being able to be simply the ultimate answer, but really needing a bigger picture, a lifestyle change in order to address your long-term physical health. Really looking at your financial plan that way and assessing that you just need to look at lifestyle and kind of the broader spectrum of how you deal with your finances, but a budget and establishing one being a real core component to achieving that. As we look at all of the components of a very broad and full financial plan, things like college planning, retirement planning, or addressing risk and insurance needs really requires a strong core foundation of a good budget in place. You need to know, where is your money coming in from, what are you spending your money on, in order to be able to assess each of those different components of the plan and make sure that each area can be addressed adequately, along with knowing that your budget is intact and you're addressing your current everyday needs as well as planning for the future. A good budget will address and consider all of the income that's coming in on a regular basis and really get down to all of the expenses and money going out on a regular basis and try to create a pretty good summary of that so that from a snapshot perspective you can have a pretty good awareness of where your money's coming from, where your money's going on a regular basis, and begin to assess any of those areas that could be modified or impacted. There may be discretionary spending, there may be specific areas of spending that you can look at alternatives for to try to address either reducing or eliminating costs or improving the general outcome at the end of the month of the overall budget. So it's really a way of summarizing what's happening on a monthly basis financially, whether you do it on a pad of paper, whether you use Excel or some form of budgeting program, as long as you have a solid foundation for the information that's going into the budget so that it's productive at the end of the month and really reflects your true income and expense circumstance. So as you work through your budget and establish what your income and expense situations are on a monthly basis, you can start to address and prioritize where you want to utilize your money. So for example, if you have existing debt that is either high cost or just general existing debt that you want to begin to eliminate, you can work the budget to address those needs and create priorities on a monthly basis to address the elimination of those debts. And similarly, college planning or retirement planning has a place, a proper place inside a good budget, but it should be prioritized, for example, not to override current ongoing monthly needs to make sure your bills are getting paid, or generally wouldn't come before paying down expensive debt. So creating priorities of utilization of your money on a monthly basis so that incorporated into your budget can be addressing those particular needs in a stacked up, prioritized manner. There are some generic standard rules that you might try to consider within a budget. For example, you'd like to know that you have 3 to 6 months worth of expenses set aside in an emergency savings account before you start to look too strongly on other areas like retirement planning or college planning. It's good to know that you've got emergency savings set aside before you worry about 30 or 45 years from now and having enough money to retire. So focusing on some range of 3 to 6 months of monthly expenses in an emergency savings account would be an example of kind of a standard guideline to have for your budget. I think in terms of assessing affordability on a home or an automobile, as you look to your budget, you can assess whether maybe a certain cost home or a certain monthly mortgage payment or or car payment really does or doesn't fit into the bottom line of your budget on a monthly basis. So having that information and having the awareness of your budget scenario helps to make the decisions about affordability for big purchases like homes or automobiles. Budgeting is probably at the forefront of any general financial plan, because as you're addressing any component of the overall financial plan, it's always going to come back to your budget and your ongoing income and expense situation, so that you can make the assessment of what you can do about each of those different components of your overall financial plan without detracting from your everyday needs on a monthly basis. So while budgeting may not be the very first topic of discussion, it really is going to enter the discussion pretty quickly whenever you're talking about financial planning. Again, whether it be a particular component of a financial plan or you're really looking at the broad financial plan in general, budgeting is going to be pretty critical and kind of at the forefront. From a standpoint of putting a budget together, I mean, the work is really understanding where your income is coming from, understanding where your expenses are, and putting that down on paper some way or another. But ultimately, one of the major benefits that comes out of it is just having a good understanding and awareness of that information, so that you can actually see where you're spending your money and understand what areas of those expenditures may or may not be modifiable. You may be able to impact or change some of those specific expenditures that you're incurring on a monthly basis. And having the information available to you gives you that awareness and gives you the ability to maybe assess that and determine whether going forward you can make some improvements or changes to the budget situation. So if you have expenses that may be discretionary, you can address those, or you may have expenditures that you could be looking at alternatives and other ways to maybe save money on those particular expenses. So it's an awareness of your situation that gives you the tools and the ability to make decisions going forward about either incurring future new expenses or about modifying existing expenses that you've been incurring all along. We talked a little about emergency savings and how a good budget will incorporate some level of emergency savings into the overall plan, so that if something did arise in life, someone loses a job or something changes drastically or a large expense occurs, you've got some money set aside to address those needs, and you don't have to start borrowing money or using credit cards. And so from a budget perspective, prioritizing that emergency savings need is important, because oftentimes someone may focus heavily upon retirement planning and they're building up a significant nest egg in their retirement account, but simultaneously they may have very little money set aside for a current emergency need that might arise, or they might in fact even be creating or building credit card debt or some other form of debt while their retirement account is growing. So those would be kind of conflicting with one another, and you'd want to take a look from a priority perspective at your budget and assess that you really need to first focus on setting aside some money for possible emergency needs. So it's assessing a budget and prioritizing those needs so that one area is not being left out for another. Tracking for your budget is critical, because once you've put the budget together and you've got a basis for what you think you're spending your money on a monthly basis and what the end result is at the end of every month, you then need a way to track it so you can measure the actual results against the expectations. And some type of tool is helpful for that. Obviously, you can use a piece of paper that you're using an adding machine to do your totals with, but using some software is going to generally provide you a much more efficient approach to that. So whether you've got an Excel sheet that you enter your data into, or using programs like Quicken, would give you the ability to have a little bit more of an automated process at the end of every month to take a look at how you're stacking up against your expectations. So you're entering data into a program, but it's doing a lot of the background work for you to provide the information back, as opposed to you needing to kind of take it from start to finish with a pad of paper or an Excel spreadsheet. So using a program that already has some of those capabilities inherent in the program itself is very helpful. Quicken is probably the basic, kind of the standard for this. It's very inexpensive, it's very basic, it's kind of like operating your checkbook on the computer, but by entering information through the software, you get a lot of automated processes on the back end and a lot of reports that you can use that are generated much more easily than if you were doing things manually. So it's probably kind of the standard of the software that's out there for something like this, particularly because it's inexpensive and it does what's needed to address, a general financial plan. When we're sitting down with clients, we would take a look at their overall budget scenario. And if they've utilized a program like Quicken to capture that information, it's very helpful for them to be able to present it to us, and we can take a look with them at how they're spending their money, what they're spending their money on, and help to begin to develop the priorities and address the other critical components of the financial plan, like the college planning and the retirement planning. Again, they may have their budget information just listed out on paper, and that's fine. It's more that the tool helps them from an automated process to be more efficient to present that information. Folks who want to create a pretty sound, solid, and accurate budget at the end of every month, software like that would help them to do that. When someone is assessing their retirement goals and taking a look at what their future may look like and when they'll be able to retire, what they'll need to retire, a good budget is really a foundation for that process because it tells you how much money you're spending today, what you need today to pay your bills and to carry on your lifestyle. And it helps to begin to assess what those needs will be in retirement. And understanding what you'll need in retirement is critical to establishing and putting together a good financial plan for retirement, because it helps to determine what do we need to save on a monthly basis and a yearly basis in order to get to the point where we will have what we need to retire and provide us a very similar income stream as we have today. So that budget kind of is the source and the beginning foundation for determining what needs are going to be in retirement years. Next, we are going to talk about risk planning, which is really insurance planning and addressing insurance needs. Life insurance, home and auto insurance, disability insurance, long-term care, all of the insurances, and really addressing what your risks are and what you need to do to make sure you're protected from those possible risks.